Hi, everyone. It's Brian Christopher from Banyan Hill here. Welcome to another edition of Market Insights. This week, I'm talking with Ted Bauman, editor of Banyan Hill's The Bauman Letter and the Alpha Stock Alert. Ted, welcome.
Hey, Brian, how are you doing today?
Very well. Thanks for joining me today.
No problem.
For the next few minutes, we'll be talking about an investment that should benefit in a world of lower interest rates. On Wednesday, Ted published a solid Sovereign Investor Daily article on the topic. I love the title of it, Ted. Tripling the S&P 500 has never been easier. But before Ted and I chat, remember to subscribe to our YouTube channel by clicking the subscribe button below. That way, you get all of our weekly updates. So Ted, let's get into it. The investment you wrote about in your article is REITs, or real estate investment trusts. Could you give us a definition of what those are?
Sure, Brian. REITs are basically a special form of company that was created as a result of tax code changes made back in the 60s. And essentially, they are companies that invest primarily in real estate or in mortgages that derive income from real estate. And as long as they meet certain conditions, they are exempt from most corporate tax, which makes it possible for them to pay much higher dividends than most companies. They also basically provide an alternative to direct investment in real estate for most people, so you don't have to buy individual properties. You're buying into a company that owns properties. And really the critical thing I think about REITs is that they trade just like stocks. They are as easy to invest in and as easy to sell as a stock. But they have certain characteristics that make them really attractive. And one of those, besides the really high yields, is the fact that in today's market, they have actually blown away the stock market in terms of return. I've got a chart here I want to show you, and basically it shows that during the period from about 1995 onwards, they have absolutely crushed the S&P 500. That's in addition to great yields. I track 50 REITs every day. 90% of them have yields over 3%. 50% have yields over 5%. Now, the only thing to remember about that is that dividend yields are related to price. So when you have high valuations and rising valuations for REIT stocks, it puts downward pressure on dividends. But that's a good thing because it means that we're getting the best of both worlds. We're getting income and we're getting we're getting good stock appreciation as well. So that's why I like REITs. They're the best of both worlds.
Is the it's a funny name, this real estate investment trust. Do you find that the name scares people off, or are people generally familiar with this vehicle?
I find that most investors are aware of what REITs are. Sometimes people who are brand new to investing, it can be confusing. But that's why why we explain in things like Sovereign Investor Daily and here today what they are. I think the key thing is that they trade just like stocks. So as long as you know how to evaluate them, which is a little different from evaluating normal companies, they shouldn't be scary at all.
Nice. And we can, as you say, we can invest in REITs directly. There's also REIT ETFs. For example, I noted one, just a big one, the Vanguard Real Estate ETF, which is ticker VNQ, yields about 4% today, and it's grown that yield 5% per year over the last 5 years. 95% of its assets are in the U.S., and it's been relatively steady, especially mainly since the crisis. But like anything, you have to do your homework, as you said, and you're educating your subscribers and the people on Sovereign Investor Daily. And so I guess one question would be, you do have some recommendations in your services as well, right?
That's correct. I do. I currently have 3 REITs in the Bauman Letter portfolio in our endless income sub-portfolio, which is oriented towards income. And what's interesting is they illustrate one of the great things about REITs, which is that they can specialize. Different REITs leverage experience in different real estate markets the management does to identify specific opportunities. For example, 2 of the REITs that we hold specialize in industrial warehouse space in urban areas. And the idea there is that with companies like Amazon trying to move to one-day delivery, everybody wants a piece of a warehouse that is like inside of a city, like New York City or Los Angeles. And those are extremely rare. So companies that own and manage those are doing extremely well. Another one is a data center REIT that basically holds the big servers that all companies like Google and Amazon need. And it has the benefit of being not just US based, but it's also exposed to big markets like India, et cetera. And the returns are explosive. I mean, you know, the data center REIT is up by nearly 20% in 3 months. And that's, you know, that's just the price appreciation. And the yield, you know, also excellent. So I like them. And
of course, you're talking, the idea here is that you want tenants that are paying their leases, paying on their leases in a reliable fashion, right? Which allows you to pay steady dividend income. Another name that I saw is a company called Realty Income Corp, and the ticker is simply O. And one of the things that's interesting about it, I know it's well known in the REIT space, but they've paid 588 monthly dividends in a row. So we're talking 50 years of dividend payments. And that one also yields about 4% today. But at times, like all assets, REITs fluctuate in price. And there have been a couple times in the relatively recent past where you could get a 5% yield with that one. But even at 4%, we're talking just a reliable payout that beats treasuries and beats you know, dividend yields on the S&P and lots of other assets. Could you, Ted, do you have some thoughts as to you know, additional reasons why you are so positive on REITs today, maybe especially compared to stocks?
Well, I do, and in fact, I think just maybe one comment about what you're talking about, yields. One of the critical things about REITs is not to go chasing after high yields just for their own sake. It's important to understand the quality of the yield, which means understanding the underlying portfolio of the company. And O, for example, is a REIT that is known for having very high quality tenants in the commercial retail space. And I think that's the critical thing. And you know, that's why it's so important to follow a subscription service like the Bauman Letter or one of your services, because that's what we do. I mean, we basically identify, is this a good company? Does it have the solid portfolio of properties that justify a high and sustainable yield? But the key thing right now, I think, is that with the Fed cutting interest rates, people are looking for income opportunities. And you know, everybody's going to pile into the stock market and drive up asset prices, but they're already high. I mean, we're already in bubble territory for a lot of sectors. So the safety of a high yielding REIT compared to, say, treasuries or a bank account, I mean, it's just a no-brainer. And I think that's really why, particularly between now and the end of the year, people should be looking at REITs as an alternative both to traditional income products like bonds and to the stock market. Okay.
Yes, that makes a lot of sense, Ted. And I think it's probably a good place to wrap up our discussion today. So you guys heard Mr. Bauman. Please consider REITs if you're looking for a consistent paying vehicle that will benefit in a falling interest rate environment. And thank you all for joining us on today's Saturday Market Insights. There's one last thing I wanted to point out. Our annual conference is coming up in September 12th to the 14th. It's going to be at the Omni Resort in Amelia Island, Florida. Amelia Island's just a beautiful place. It's along the ocean and it's full of trees, and all of our experts will be presenting. I guess, you know, that's the important part that we want to point out. We've got all of the Banyan experts plus another well-known guru, Dave Ramsey, will be there as well to answer all your questions. But the thing about and our conferences are always really well done, but the thing about Amelia, it's just a beautiful place to go to regardless of the conference. So if you're interested, I encourage you to go visit the website, totalwealthsymposium.com. You should see it on your screen there as well. And thanks again. We'll have a brand new edition of Market Insights next Saturday. So make sure to look for that in your email. On behalf of Ted, Michael Carr, Jeff Yasteen, Ian King, and everyone else at Sovereign Investor Daily, thanks for watching.